Rounds 3 and 4 represented an important stage in Digby's continued growth and international expansion strategy. During these rounds, the company focused on maintaining competitive product positioning within the performance segment while expanding its operational presence into the Asia Pacific region. Overall company performance improved across several key financial and operational metrics. Sales increased significantly, operating income improved, and the company strengthened its liquidity position through strong operating cash generation and improved inventory management. At the same time, the company experienced operational challenges related to production forecasting and the cost implications of expanding into new international markets. The following report reviews the performance of each major functional area: research and development, marketing, production, and finance, explaining the causes behind current results and outlining how the company plans to build on successes and address areas requiring improvement. Research and development performance. Digby's R&D strategy during the most recent round focused on maintaining strong positioning within the performance segment while controlling development costs. The product specifications were maintained at the following levels: speed 10.5, accuracy 10.5, service life 19,000 hours, perceived age approximately zero point 0.6 years. These specifications keep the product very close to the ideal customer expectations in the performance segment. The service life remains directly within the preferred customer range of 17,000 to 23,000 hours. The strategy for this round emphasized maintaining competitive alignment with the segment's ideal position rather than introducing major design changes. By holding the product specifications near the ideal position while maintaining a low perceived age, the company ensured that the product remained technologically current and competitive on the perceptual map. R&D investment was intentionally minimized this round, with no additional development spending. This decision allowed the company to control costs while maintaining product competitiveness and redirecting financial resources towards other strategic priorities, including market expansion and marketing activities. Overall, the R&D approach focused on maintaining alignment with evolving customer expectations in the performance segment while practicing disciplined cost control. Marketing performance. In earlier rounds, incorrect forecasting created significant challenges for Digby's marketing performance. Forecasting inaccuracies resulted in missed sales opportunities and inefficient allocation of marketing resources. For round 4, forecasting analysis was significantly improved. The team carefully evaluated regional growth rates, historical company performance, competitor market share levels, and pricing conditions across each region. As a result, the company's forecasts fell directly between the best case and worst case projections for the first time during the simulation. The pricing strategy continued to balance production costs with the consumer expectations. Although the product offers one of the highest quality levels in terms of speed and accuracy, price sensitivity remains significant because cost represents approximately 50% of customer purchasing consideration. Rather than aggressively increasing prices to reflect quality advantages, the team selected a conservative price increase in order to remain competitive with competitor pricing levels. Marketing spending was also adjusted during this round. The company had already achieved strong awareness and accessibility levels in previous rounds, yet market share remained below expectations. As a result, the team reduced marketing expenditures in both the Americas and Europe while allocating sufficient funds to establish a presence in Asia following market entry. These adjustments allowed the company to maintain strong product awareness and accessibility while improving pricing competitiveness. With improved forecasting accuracy and better pricing alignment, the company was able to capture previously missed sales opportunities. Moving forward, maintaining competitive pricing and strong product performance while focusing on high growth regions such as Europe and Asia Pacific is expected to further increase Digby's market share. Production performance. During round four, Digby expanded operations into the Asia Pacific market as part of its strategy to grow global market share. Production planning during this round was influenced by operational challenges from the previous round. After round three, Digby experienced a stockout in the Americas due to underproduction, while simultaneously holding excess inventory in Europe as a result of overproduction. To address these issues, the production team adopted a more conservative forecasting and production approach. Production levels were planned carefully, using regional growth projections while attempting to avoid excess inventory accumulation. As a result, actual sales in the Americas and Asia Pacific markets fell within projected ranges. However, a minor stockout occurred in Europe due to slight underproduction. Despite this issue, the market share report showed that Digby's actual and potential market share in each region remained very close, within approximately 2%. This indicates that the company's projections were reasonably accurate and that the majority of excess inventory has now been sold. In total, the company produced 1,875 units across all regions during the round. None of this production was outsourced. Digby continued its strategy of utilizing full internal production capacity before outsourcing in order to maintain higher contribution margins. This strategy supported Digby achieving an industry leading contribution margin of 43%. Automation levels were not increased during this round. Management prioritized flexibility in product update turnaround times and maintaining lower product age levels rather than pursuing additional automation investment. Based on current sales performance and industry growth projections, the company does not anticipate needing to expand production capacity in the next round. However, partial outsourcing of production may be required during round five to meet projected demand levels. A major operational improvement occurred in inventory management. Inventory declined from approximately 17.9 million in 2029 to 10.6 million in 2030, freeing significant working capital and contributing to the company's strong operating cash flow performance. Financial performance. Financial results showed significant improvement between 2029 and 2030. In 2029, Digby remained profitable but experienced weaker cash generation relative to reported earnings. Sales reached $61.9 million, EBIT was $5.2 million, and profit totaled just over 1 million. During the same period, inventory increased to $17.9 million, while cash declined to 5.3 million. The company also relied on additional external financing through new long-term debt and stock issuance, reducing financial flexibility. Financial performance improved substantially in 2030. Sales increased to $87.2 million, EBIT rose to $15.5 million, and net income reached approximately $6.9 million. Operating cash flow also strengthened significantly during the period. Cash balances increased to 26.1 million, while inventory declined to 10.6 million. These results indicate that operational improvements were not limited to accounting earnings, but also translated into stronger cash generation and improved inventory management. The company's entry into the Asia Pacific market also occurred during 2030. While the region represents an important long term growth opportunity, it produced negative earnings during the year due to initial market entry costs, including higher promotion and sales expenditures required to establish awareness and accessibility. Looking ahead, Digby enters 2031 with improved liquidity, stronger cash flow, and increased market share both in Europe and Asia Pacific. Management's financial priorities moving forward include maintaining disciplined spending levels while supporting continued growth across all markets. Particular attention will be given to managing SG&A spending as the company continues expanding its international presence. Strategic outlook. Following rounds 3 and 4, Digby has strengthened its competitive position in the performance segment while successfully expanding its global market presence. The company has maintained strong product alignment with customer buying criteria, improved forecasting accuracy, strengthened contribution margins, and significantly improved financial performance. However, the results also highlight the continued importance of coordination across departments. Forecast accuracy, production planning, and disciplined financial management will remain critical as the company expands into additional international markets. Moving into the next round, Digby will focus on improving profitability in the Asia Pacific region while continuing to strengthen market share across all regions. Maintaining product competitiveness, accurate forecasting, and controlled SG&A spending will support sustained performance improvement in the simulation.